Welcome to episode 8 of Real Estate with the Carters. I'm Annalyn Carter,
And I'm Christopher Carter.
and together we are the
Carters.
Carters. Welcome, welcome, welcome. We are filming our 8th episode. This is so excited. We're almost to episode 10,
Right.
right?
Our plan is to have at least 100 episode for this year, next 12 months, 11 to 12
Yes.
months. So we're on our way.
Yes.
We're on our way.
Yes, we
We're
are.
at episode 8, and we're gonna get to 100.
Definitely, most definitely.
Okay.
We will do.
Perfect. All right. So what's on the agenda for today?
All right, so we're going to jump into today's topic, and today's topic is about getting a mortgage as a self-employed borrower,
Okay.
right?
Perfect.
So we are going to talk about what they need, how to get themselves prepared, in purchasing a new home
Right. The kind
or
of
an
mortgage.
investment, right?
Kind of mortgage that they'll need. Just all about how they're going to go about just getting approved for a mortgage.
Okay.
All right, without further ado, let's jump right in.
Right.
All right. So first, who is a self-employed borrower?
All right, so a self-employed borrower could be someone that owns a business,
Right.
someone that freelance, a contract worker,
Right.
an independent contractor.
Right.
We said again, someone that owns a business, as for example, a sole proprietor,
Right.
right? Someone that, for example, could be an Uber driver, a realtor,
Yeah.
a mortgage
Mortgage.
lender,
Correct.
right? So
Right.
those are people that are self-employed. A barber,
Right.
right?
Yeah. Truck driver.
Truck drivers.
Right. So once you are in full control of your income, so you determine or based on your output or your own initiative, you
Okay.
determine your income.
All right.
Just to go to the legal definition is that from a lender's perspective, you're qualified as a self-employed borrower once you own at least 25% of a business.
Okay.
So minimum is 25%. So if you're in a partnership where you're both 50-50, you're still considered self-employed because you own 50%.
Okay.
If you own less than 25% of the business, then you may that self-employed borrower designation may not apply to you because then you're not in control of the business.
Okay.
All right.
All right.
So let's keep going. Now, generally qualifying for a mortgage as a self-employed borrower is a little difficult, more difficult than if you were like a W-2 employee. And the main reason is really how do you prove your income,
Okay.
right? Most self-employed persons may do their taxes, some may not. You don't get a W-2 or a pay stub like a W-2 employee.
Right.
So how can how are you going to be able to show that you make whatever income that you're gonna need to qualify for this mortgage?
All right.
All right. So to qualify for a mortgage, generally there's a standard set of guidelines, right?
All right.
One of the main things is that you need to be employed
For at
or
least
self-employed for
for
at least 2
2
years, right?
All right.
And the second one, as a self-employed person,
Like you mentioned before,
Right.
to have 25%
25% ownership of the business,
Okay.
right? So a 2-year minimum of employment or
Okay.
ownership,
Okay.
right? So the lender's gonna need to see that you've been actively doing this business, and some confusion is usually between registering on Sunbiz and being self-employed. You can be self-employed without having a registered business on Sunbiz, right?
All right. Say that again.
Right. So you can be self-employed without having a registered business on Sunbiz
Or registered business at all.
at all. Correct.
Okay.
Because, for instance, a landscaper, a barber,
Right.
you may be in your daily activities, you may be performing your duties as a self-employed
Self-employer.
person, right?
But you're not legally not registered.
Right. You're not registered,
Registered.
so to speak. I mean, in terms of documenting your business with Sunbiz, with IRS, that nature.
Okay.
So being self-employed and being registered is absolutely two different things.
Okay.
Now, if you're registered as a self-employed person, you have an LLC or an Inc., right?
Mm-hmm.
Then you're going to, when you file your taxes, you're going to have the business taxes, and you're
Right.
going to then you have your
Personal.
personal. So you have two taxes: the business taxes and your personal, right? If you're a self-employed person that is not registered,
Mm-hmm.
right, meaning you don't have a
An
Sunbiz
LLC.
registered,
Right.
then you have one tax,
Okay.
right? That's your 1040. And on your 1040, there's what is called a Schedule C.
Okay.
And the Schedule C is used to document the activities of your business,
So you can
right?
itemize all
So you
your
can itemize all
expenses.
your expenses, your income, and at the end of the day, the your tax preparer is going to tabulate the income, tabulate the expense, and then net them, and then that's what's going to be reported on line 8 on your 1040 as your income,
Okay. All
right?
right.
So
Got it.
that is extremely important, because sometimes some people, oh, but I'm not registered. No, being registered brings added value, and
Right.
we kind of get into that further on. But you don't definitely need to be licensed, right?
Okay.
Now, one of the main issue of being a self-employed is that your income fluctuates,
Mm-hmm.
unlike um, uh, an employee who has a set income
Every
every
week,
2 week,
weeks, or
every
every
week,
week,
right?
right? Every month.
Every month, right? A self-employed person may make 1 million this month, and then
And
next week is 200,000, or they
right.
may not make much next month. The income may be seasonal. Like for instance, if you were in Colorado where it's the winter,
Mm-hmm.
most of those businesses are centered around the winter season,
Right.
right? So in the summertime, you may not be, your income may be a little lower than it is in the winter
Wintertime.
time. So you have that seasonal up and down with the income. So that is one of the main issue with being self-employed, is that because your income is not,
Fluctuates.
it fluctuates. So the lender's going to be a lot concerned that you're not be able to. Some months you may be doing well. Second month, next month you may not be doing so well. So how do we
How do they
document,
offset that?
right? And so further on in the discussion we'll be
Okay.
jumping into
Into
that.
that.
The
Right.
other thing too is that most self-employed people may take all their expenses. So if they may write off a lot of their expenses, so they make say 200,000 for the year in income.
Mm-hmm.
However, the expense is 199,000. So on paper, it's showing that they're only making 10,000.
Right.
Now, how would that person be able to qualify for a mortgage, saying that although they made 200,000, their expenses is 190. So really, they actually only make 10,000.
Right. Because when you do your taxes as a self-employed person, you're telling Uncle Sam that 109, like the example that Chris just gave, that 190,000 of that is expensive. So that's supposed to be a true statement,
Right,
right?
right, correct.
So in theory, if you do report that and you come and you're trying to get a mortgage and you're saying you only made 10,000, then that's
Right.
not gonna
Then,
work.
right. Typically, that you're not going to be able to qualify.
All right.
All right.
Okay.
Now, some of the issues, as we were mentioning before, that are faced by self-employed borrowers, and one of the first one is the fluctuation
Not
of,
having a regular paycheck.
right, and therefore you're going to now require additional kind of documents or different kind of documents as opposed to an employed person, right?
Okay.
Right. Number two are to qualify with lower declared income on tax returns. And we
Right.
just mentioned
Sure.
that most self-employed persons claim all their expenses,
Mm-hmm.
right? And in claiming all of that expenses, it reduces their income to a point where sometimes the income that they report is not sufficient to
Sure.
qualify them for a mortgage,
All right.
right?
One of the other things that you may need, right, as you said, that as a self-employed person, you're gonna need to verify your income. So another thing that you probably can get is a letter from your CPA,
Correct.
right? Or audit your financial statements.
The audited financial statements, right? So
Right.
those are going to be, so you're going to be required to show
Additional
additional documentation
documentation.
or other documentation that would not be required if you were employed.
Okay.
One such as audited financial statements, your tax returns, both for the business and for your personal. They may even require you to show proof that you've been self-employed for how many years that you're declaring.
Okay.
So, for instance, if for most lenders it's 2 years. So, if you need to show, you may be required to get a letter from your CPA, your bank statements for 2 years. So, it's going to require you to be proven with additional documents, a lot of stuff that if you were employed, then those things would not come to the fore, right?
Okay.
Another issue with self-employed borrowers is a commingling of funds.
Okay.
Um,
So
what
you're saying that my personal funds and my business funds can't be counted towards getting a mortgage?
no, we're not really saying that. Is what we're saying is when it's time to show what the business make.
Right.
If for instance,
Say I got a loan,
right, and I put that in the business
business
account,
account.
then the loan is not income.
Okay.
Right. And so in calculating your income, your tax preparer is going to be having some difficulties in differentiating what is personal,
Okay.
right, and what is business related. Rule of thumb, and I always suggest this for all my self-employed borrowers, is maintain your business account and only put business transactions through that business account, right? So don't commingle.
Right.
So if you have two businesses, have two separate accounts, right? In that way, one, you can track the activities for one business as opposed to the other business. And two, when it's time to do your taxes or time to do financial statements or whatever financial documents that you need to create, then you can accurately differentiate between both because this account deals with business A, this account deals with business B.
Right.
So that's definitely important.
And like you mentioned before, as a self-employed, having a decline in income, right, will
Right.
be like a red flag to the lender. So,
Correct.
it's gonna happen. But again, like you said, that you get like additional documentation to
Right.
prove that you are equipped in borrowing this loan to purchase this
Right.
house.
And just to even touch that point a little bit, if you make 200,000 for the year, but 50 or 80% of that 200,000 is only made in the summer months or in the winter months, then as a lender, they're going to be a little bit cagey about lending you a mortgage or giving you a mortgage that you have to pay consistently over 12 months because it's not like you're only going to pay the mortgage in the months that you're making money. You have to pay the mortgage consistently every month. And so when you have fluctuating income, it's, the lender has to come up with a way of kind of leveling it out in
Okay.
a sense that it makes sense when, in qualifying you for the mortgage.
Okay.
All right.
All right. So we're gonna talk about required documents that you're gonna need as a self-employed borrower for the mortgage.
Right.
Tongue twister.
Right. And
Right.
we'll mention a couple of them before, so
right.
let's just dive deep into them. So the
Right.
first one is your 1040. If you're self-employed but you're not registered, meaning you don't have a Sunbiz registration, then your 1040 with your Schedule C is what the lender is going to be required. They're going to require that for 2 years, and it's the two most current years.
All right. For 2 years.
2 years.
Okay.
Correct.
All right.
Right. So that's number one.
All right. The second one will be a year-to-date balance sheet for a profit and loss statement.
Okay. So with that, because then the tax return or your 1040 looks at it for last year, but in the current year,
profit
the
and loss
lender is
statement.
going to want to know what year to date, what kind of income you're making.
Okay.
And so your tax preparer, your tax accountant, your CPA is going to be required to prepare what is called a year-to-date financial statement.
Okay.
What that does, it tells the lender to this point, we're in July. So between January and July, these are the activities, and this is the amount that you've made on your in your business,
Okay.
right?
And the next form or documentation that the lender may require from you is a form 1120S, right?
Okay.
So what is 1120S?
And so 1120S is your tax return for a business, a C corporation,
Okay.
right? So once you have a business that is registered, that is separate from you, the person. So you're not reporting on a Schedule C.
Okay.
You're legitimately registered.
Okay.
Right? You have a business, it's registered. You have an EIN number. So in that sense, now your CPA is going to report your income on 1120S, right? Or if you're a corporation, right?
Okay.
There are different forms. If you're like a partnership, there's a different form.
So as an LLC company, you won't use a 1120S form?
Yeah, if you're say that again.
I said as a limited liability company,
Right.
LLC.
So you can be an LLC, but you're reporting as an S or a C.
Okay.
All right. If you're reporting as a C corporation, then the 1120S is going to be required.
Okay.
What the 1120S does, it documents the business activities separately from the person. Remember when we did the self-employed that is not registered, we only look at the 1040 with the Schedule C, right? The 1120S is like a Schedule C for a business.
Okay.
Correct. And so that's one document that you're going to be required.
All right.
Right?
Another document that the lender may ask for are bank statements.
Correct. So if you're doing like a bank statement loan, then they may require 12 months of bank statement. If you're doing to prove the down payment and closing, they're going to require 2 months of statements.
Okay. And they also may require you get your a copy of your business license.
Correct.
And a statement from your CPA.
Right. So depending on the nature of your business,
Okay.
there are some businesses that are required to be licensed,
Right.
to be legal.
Right.
Right.
Well, most business in the state of, if you're in the state of Florida, most business that you do operate needs to be licensed.
Right. But again, we separate being licensed
And
from having a business, right? Because you can have a business that you don't require to be licensed, right? Your business, like if you're an accountant, you don't necessarily need to be licensed to be an accountant.
Yes, you do.
Right? A tax preparer don't necessarily need to be licensed. Being licensed is different from the activity. So, like for instance, if I'm a tax preparer, right? I don't need a license to be a tax preparer. I can just get up and open my business and do tax preparing, right? But if I'm running a gas station, that's totally different. Because you can't just wake up tomorrow morning and open a gas station. There are certain licensing and certain requirements by the state that is going to be required for you to open that gas station.
Right.
If I'm a barber, if I cut the lawn.
If you're a barber, you need to be licensed.
No.
Business license. We're talking completely two different things.
But you don't even need a business license. You can have a barber that just set up a shop or work from home. He's still self-employed. He doesn't need a license to cut someone a ear. It may be needed, but it's not required. You don't require a license to cut someone ear. Because I know barber that operates from their house, that the client goes to their house and get their hair cut. They're not licensed. Now, having a business license is different because a business license is now your individual county may say, okay, for you to operate the business in my county, they want you to get a license because they want to, it's to document how many persons are doing business and then to collect taxes. But there are many businesses that don't have that license. They should have it. It's required, but they don't have it. But having it or not having it doesn't prevent you from operating the business. So we have to always make that distinction between being licensed and running a business. Running a business in most cases doesn't require a license,
Okay.
right? A license comes into place where there's certain kind of business that may require you to, even before you set up, right? Like a gas station, for instance. Nobody in their right mind is going to just wake up and open a gas station
Right.
because there's certain license that you're going to require to have just to get approved by the state. All right. Now, I hope that's cleared up because a lot of people, oh, I don't have a business license. No, but you can be self-employed without having a business license. Having a license and being self-employed is just two separate things. You may require to have a business license to operate in the city, right? But if you don't have it, that doesn't mean you're not operating the business. Because remember, we can show that you're operating the business by a couple of stuff. We can get your CPA to write a letter to show that you're operating the business. Obviously, having a business license shows that. But what if you don't? What if you say, okay, I'm not gonna go register my business with the state or with the city? But
Well,
you
it all
still,
depends on what you're doing.
obviously, correct, right? Because like I said, there are some businesses that it would be illegal to set up and run without having the requisite license. All right. So we want to jump into how is a self-employed person's income
It's
is
calculated.
calculated, right?
Okay.
And it's just depending on the kind of mortgage that you're going to be accessing. And let me jump right in. So the first one is tax return, right? 2 years tax return. So if you're going to be using your tax return, 2 year tax return as your source of income, then it's very simple. 2021, 2022. You take 2021 and 2022, add them together, divide by 24, right? And that is an easy way of calculating your income if you're using tax return. Now, a small caveat to that, though, is this. If 2022 is below 2020, is less than what you made in 2021, then we're not going to be looking at the average.
Okay.
If 2022 is more than 2021, we add them together, divide by 24, or add them together and divide by 24, and we can get what's a monthly income.
Okay.
Right.
So say that again.
So say 2021, we made
It's less.
50,000. 2022, we made 100,000. So between
Okay.
50,000 and 100,000 is going to be added together, divided by 2, is
You get the
75,000 for the year, and divide that by 12, you get the monthly income.
Okay.
Now, if in 2021 you made 100,000, but in 2022 you have declining income, you only made 50,000, the lender is not going to give you that average.
Okay.
What they're going to do, they're going to use 2022, the most recent year, because that year is
The current year.
current. It's
Right.
telling the lender that based on your activity of your business, this is what you've made for this year. Now, you can have reasons. You can tell the lender, or you can show the lender that, I took off for 6 months and I went to Japan for holiday, right? There could be a legitimate reason why 2022 is less than 2021. But the safest bet is that most lender is not going to do an average.
Okay.
They're going to say, well, unfortunately, your income
For the current year.
for the current year is showing a decline in income. So it's showing that between last year and this year, you're making less this year. And so based on that, we can't give you the benefit of the doubt.
Right.
We can't say, oh, well, let's hope next year is even better. We can't say that. What we're going to say is, based on the calculations that are showing, we're going to have to reduce what we're able to qualify you for, and we can only use 2022 figures, right? If you're using bank statement income, right? Well, bank statement is they're going to require 12 or 24 months. Now, they're going to go through the bank statements and they're going to look at the deposits. And again, going back to something we said earlier, they're going to look at the business related deposits. So if I get transfer from one account to the next, that may not be included. If I get child support, if I got a loan, if I all of those stuff, once you're in a business activity or once it can be linked directly to the business activity, then the lender is going to be going to disallow them.
Okay.
So again, the deposits are business related deposit. The lender is going to add them together, divide by 12 if it's 12 months bank statement. If it's 24-month bank statement, they're going to add all the deposits together for the 12 months or 24 months and divide it by the respective number, either 12 or 24 months. Okay. All right, so those are in a nutshell, the easier way of calculating the income. Now, if you're using, like, for instance, a profit and loss loan, right, where it's going to show on the bottom line what you made for the year. So the lender don't need to divide, because the profit and loss, they may say, okay, let's use your most recent P&L or a 1099 loan. Let's look at your last 1099. So that is what they're going to be using. Whatever it shows that you made, then that's what they're going to use to calculate your income. All right? Now we're going to go for a quick break. I hope, again, a lot of what we discuss today is geared towards self-employed person or even persons who are employed but also have a gig.
Like a subcontractor.
Right. So I may be employed in my daily job by company A, but then I have a part-time thing that I do on the side. This is my own gig. I drive Uber. I may bake cake. I may do some sewing. And then that income can also be added to your employment income to determine what you qualify for in buying a mortgage and buying a home.
Okay.
All right. So let's go for a quick break. When we come back, we'll take you deeper into today's topic.
All right. See you soon.
See you soon.
Life is full of challenging decisions. Finding the right mortgage company should not be one of them. We at Loans Hub Mortgage and Finance are leaders in residential mortgages, refinancing, and investment property financing. We have a loan solution for your every need. Call us today at 954-947-8662, or you can find us online at www.loanshublending.com. Your next approval is just a phone call away. Loans Hub is an equal housing lender, NMLS 2220747. Welcome back to Real Estate with the Carters. I'm Annalyn Carter.
And I'm Christopher Carter.
All right. And this show, we are talking about getting a loan as a self-employed borrower, right? So in the first segment, we talked about what was defined as a self-employed borrower, what documentation the lenders require to prove your income, and also we talked about
the income is calculated.
Right. So in this segment, we're going to talk about like the different type of loans that you can get as a self-employed borrower. Okay.
All right. So let's jump right in. All right. So as a self-employed person, you have two options. You can get approved for a loan using the traditional method.
As in FHA,
conventional, or you can go on the non-traditional, the non-QM side.
Okay.
So you have two options. You have the traditional 2 years tax returns if you have your tax returns available, or if you don't have your tax return, then you can go on the non-QM side where you can use profit and loss, bank statements, and there are others. So what we're going to be doing in this segment is kind of just walk through a couple of these loan type so that you can get a better understanding of what options are out there as a self-employed person. All right. So we're going to examine 5 most widely used loans
Okay.
for self-employed. So one of the main one,
Is a bank statement
bank
loan.
statement loan. All
Okay.
right. So most persons should be aware of a bank statement loan. It generally required for you to show 12 or 24 months. Right. There are a couple lenders that do like a 3 month bank statement too, but
Okay.
generally it's 12 or 24 months. So let's just walk through some of the criteria on a bank statement loan.
All right. So the first criteria, it would be having a minimum down payment of about, was it 10%?
10%.
Okay.
And just a little point in that, 10% usually goes with 700 credit score,
Okay.
right? So on the non-QM side, your score, your credit score is going to play a significant role in your loan to value,
Right.
right? There's a big difference on the non-QM side of having a 580 score or a 780 score. On the QM side, which is on the traditional side, FHA, conventional, it may not so much affect your LTV as it affects the rate.
Okay.
On the non-QM side now, it affects your LTV and also the rate.
Okay.
So if you have less than a 700 score from most lenders, you may not be able to do
bank
a
statement.
bank statement using 10% down. You may
Okay.
be able to do a bank statement loan, but it may be that you're required to go 30% down or 40% down and not 10% down.
Okay. So in the bank statement loan, you can use so another thing that you can do is the business and the personal bank statement.
So it's business or personal.
bank
That's
statement.
important because then, so generally, if you use your business bank statements, you can't use your business and your personal.
So either or.
It's either or. So it's either you 12 months of business or 12 months of personal. Now, if you use your business bank statements, the difference with that and using your personal, with your business bank statement, they automatically cut the income by 50% because they apply a 50% expense ratio.
Okay.
If you use your personal bank statement, providing you also have a business, then you can use 100% of the deposits in the personal bank statement. So that's a significant difference. All right?
Okay. All right. So another thing required is the no mortgage insurance.
So there's no mortgage insurance on a bank. In fact, most non-QM products doesn't require mortgage insurance, right?
Okay.
Right.
Right. So and then also is a fixed rate, fixed mortgage rate, right?
So you have a lot more options on the non-QM side. Like on a bank statement, you can do a fix, you can do a 30-year fix, you can do an adjusted rate arm, right, where you have a teaser rate on the first 5 years, which is adjusted. So you have a couple. You can do interest only. You can do 40-year term with first 10 years of interest only. So you have a couple more options on the non-QM side on these loans as opposed to on the QM side or on the traditional side where those can be a bit limited.
Okay.
Right.
All right.
Another criteria on a bank statement is that on the debt to income, there are lenders. Most lenders allows up to 55%, which is equivalent to what is allowed on the FHA side, where the DTI can go up to 56% on an FHA loan. On a bank statement loan, some lenders takes you up to at least 55%.
55. Okay.
Right.
All right. And then you said that the deposits that are going to be used, right, it has to be business related.
Only business related deposits can be used.
Okay.
So if you have other deposits going into your bank statement, for instance, you get in
your business account.
In your business account, correct. Even if it's not your business account, but if you're using your personal account, right? So for instance, I'm self-employed. I'm a barber, right?
Okay.
I don't have a business bank statement, but I'm using my personal, right? the lender may say, okay, let's take your personal. Now, what is the average cost to cut a year? Say $20.
$20.
Right. So they may be looking through your deposits and say, okay, there's okay, 25, 30, okay. But let's see something for $2,000.
All right. They're gonna question it.
They may circle this one and disallow this one. Why? Because it's not regular
Okay.
in
Got
your
you.
business activity for you to collect $2,000, right? So the lender will go through your deposits, right?
Unless that day you did a lot of. What if that could work? What if you did like a charity event or
All right.
something? And you,
So
that
this
just
is
made-
generally how it
which
is.
is
The
negative.
lender may disallow it.
right.
I've seen cases where lenders disallow transaction or disallow deposit, and then the client provides
A letter of explanation.
documentation. It's not just a letter of explanation, but documentation
Okay.
to say this is the reason for this deposit, right? So again, it's never no.
All right.
If it's no, then you have to prove to the lender why they should be saying yes.
All right.
All right. But generally, on a bank statement, it's a very good product. 12 or 24 months bank statement. Once you're in it, you can show the 12 and 24 you've been in business for 2 years. 10% down with credit score over 700. It's a great product, right? Because one, you don't need tax returns.
Okay.
You're not so right. So they're not requiring you to show bank statements and tax return. Put tax returns aside. Let's see your bank statement. And so you do have to be filing your tax return with the IRS. That's you and the IRS business. The lender just want to see your 12 or 24 months business or personal bank statement. And based on that, they can calculate your income.
All right.
All right, let's go to the next
type of
product.
loan. So, which is a 1099 loan.
Right.
Right.
Very good product. Same like the
Bank
bank statement, which is a very good non-QM. It's a non-QM product. It's a very good product, but there's some
Drawbacks.
guidelines, and
Okay.
let's jump right into them.
All right. So one of the guidelines for if you're doing a 1099 loan is the minimum down payment required for this is 20%.
Correct.
Okay.
And so that's one of the bigger drawbacks
Okay.
to a loan like this because it requires a
bigger
bigger
amount.
deposit down.
Okay.
But again, there are a lot of persons who get a 1099 from their gig. Like for instance, subcontract. I'm an Uber driver. I do. I work for Uber.
Uber
I'm
is-
not employed by Uber. I'm a subcontractor. At the end of the year, Uber issues a 1099.
All right.
Now, if I file my taxes with that 1099, I may write off my gas, my this. Before you know it, that income is very small. Now you can bypass that and not go into tax return and say, okay, let's use the income. So Uber said I made 80,000 on my 1099. The lender's going to use that 80,000 in qualifying you for the mortgage because that's what's reported on your 1099.
Okay.
Right.
So even though like I get a 1099, right? And say I don't file taxes, the lender is going to use my 1099. It's not going to
1099.
require a 1099 and my tax
No.
return. Okay.
The 1099, no tax return required.
All right. Awesome.
Right. But again, the deposit, the down payment rather, is going to be higher than a 5 or 3.5% if you're going like FHA.
Okay.
So you have to kind of weigh the
The
benefits,
pros and cons.
the pros and cons. Because it may be, because then I may file my tax return, but I owe Uncle Sam X amount,
Okay.
right? I don't want to owe Uncle Sam, or I don't want to file my taxes. So instead of filing the taxes, let's use the 1099. I'm okay putting a bigger deposit down as opposed to giving Uncle Sam that bigger deposit.
Okay.
All right?
Another criteria for doing a 1099 loan will having a fixed mortgage rate.
Right.
So it could be from 15 to 20
Right.
or 30-year term.
Right.
right?
And you also have options of adjustable rate mortgage, or which
With the
arm,
1099. Okay.
which a 1099 loan. You can do a 40-year term. You can do interest only. So there are a lot more options again on the non-QM side for business owners as opposed to if you were doing like an FHA or a 1099 or conventional loan.
Okay.
All right. Again, the lender may require 1 or 2 years in for 1099. So they may require 2021 1099 or in 2022. Some lenders may say, okay, just show me 2022 1099. However, rates, so when you're using 2 years tax return or 1 year tax return, there's usually between a point or as a half a point as much as a point difference in the rate. Because obviously if I'm showing 2 years worth of income, that's more predictable, right? As opposed to I'm only showing one. So this year was a great year for me. I made 200,000. But if they looked at last year only made 50,000, right? So if they were to average, then I wouldn't be qualifying. But then if I only put 2021 to the side and only use 2022 where I made 200,000, then I'm going to be qualifying for more.
Bigger, right.
But then that comes with a little rate adjustment, usually up to a point greater on the rate.
Okay.
All right.
All right. So with the credit score, when you use a 1099 loan, needs to be at a 640 or higher.
Right.
Because it gives you a better rate.
And and some lenders are not going to do a 1099 loan if you're below the 640.
Okay.
The rates are generally lender to lender. Sorry, not the rates, but the credit score requirement is generally lender to lender. So you may have a lender that may not take a 630. There may be a lender that takes a 630. That lender may do a rate adjustment on a 630. So instead of you getting a 7.9 on a, it give you a 8.2, 8.125. Okay. So it's on the non-QM side, it's usually lender by lender.
Okay.
Most cases, though, they're going to require you on a 1099 loan a 640 or above credit score.
All right. And then we discussed before, no tax return is required for a 1099
No
loan.
tax return, no mortgage insurance.
Okay.
Okay.
And then they're going to ask for again 1 or 2 years of your 1099.
Correct.
Plus your profit and loss statement.
Yeah, year to date earnings. So
Okay.
if you're say in the middle of the year, we're in September now. You're doing a loan using your 1099. They may ask for 1099 for last year.
Okay.
But they may also ask you to get from your accountant a year-to-date statement to show what you've earned so far this year.
Okay.
Because they want to make sure that you're on track this year as opposed in conjunction to what you made last year. Because last year I had a good year, I made 150. Am I on track again to make round about that amount for this year? Okay. All
right.
The next loan that we want to touch a little bit on is what's called a community mortgage loan. All right. And that loan is usually designated for primary and second.
Homes.
Second home, right? So you can only buy your primary resident or a second home. The loans that we mentioned before, you may be able to use them to buy an investment property. In this case, on a community mortgage is only for primary or a second home.
Okay.
No income, no credit. Sorry, no income, no job. So you do have to be employed. No employment, no income.
So you don't have to have an income from an employer.
No.
Right?
Neither 1099
or from self-employed.
No income.
All right. So once you have, I guess, money in an account.
Right. So this loan, there's two things: loan to value, right, and funds.
Okay.
So it requires minimum 20% down. Usually the credit score is over 700 to get 20% down. And generally require 12 months of reserve in the account.
So who would this loan work best for? Is there a particular, I would say, group
somebody
of
who's
people?
retired that has a large sum of money in their in their account. A business person who has who is ever with cash and but they can't show their bank statement. They may have taken some time off, so their bank statement is not showing recent activity.
Okay.
Generally, it's generally this loan is designed for again persons who have high credit score, right? You're not going to be able to access this loan if your credit score is 580.
Okay.
Most lender, well, the two lenders that I've worked with on this loan, their minimum score requirement is 680. Right. Over 700, you can go as low as 80% loan to value.
Okay.
Right. Again, like I said, the FICO around 680. There's no PMI, no mortgage insurance, right? And you can do a purchase or a cash out on this loan. So it's a very, very good product. Again, the big drawback on this loan is that you have to minimum 20% down on a 680, minimum 680 score, and two, reserves. Not only do you need to have funds for deposit and down payment and closing, but you have to be able to show at least 12 months of
whole
reserve.
year.
One whole year of reserve, and you have to show that in an account or in some liquid form.
Okay.
Right? So that's one of the drawback, but it's a very great product. I've used it in most recent times, and it has done well.
Okay.
Right? Because no income, no job. So I do have to show my income, do I have to show the job.
You just have to have funds in the large
But
amount
it
of funds in the
requires
account.
funds because that 12 months deposit, 12 months
Much
reserve
is a lot. Right.
Right, can be an after sum. So and you have to have that in addition to your deposit, your down payment rather, and your closing costs.
Right.
So
it's like,
it requires
it would be great
three.
for someone like, say, you had some type of lawsuit or something. You come in a large sum of cash and you want to purchase a home.
Correct.
This will be a great product for them.
It's a great product.
Awesome.
All right. The profit and loss loan.
Okay.
All right. A very great product too for self-employed people. And the reason for that is on a profit and loss loan, you have two options. You can either do CPA prepared,
Okay.
meaning a licensed CPA can prepare it. Or there's lenders that do self-prepared 1099, self-prepared profit and loss rather, not 1099, profit and loss. So I can write that my business made 5 million, right?
Right.
And the lender will take that.
But it has to come from us. That
No, it can be self-prepared, right?
Okay.
Or you can have CPA. Now the difference is on the self-prepared side, those rates are higher.
Okay.
And those LTVs usually are higher, right? But it can either be self-prepared or prepared by a CPA or a licensed professional, like a licensed tax preparer. All right. Again, those loan to values are usually minimum 80%. Sorry, maximum 80%.
80% LTV.
So you're required to put minimum of 20% down, right?
Right.
They may either use 1 or 2 years profit and loss.
Okay.
Right?
And do your credit score has to be at a certain...
Correct. And usually they're required minimum 680. I've seen lenders go as low as 640, but those rates are going to be a little bit higher.
Okay.
Right? I've even seen lenders go as low as 600. But the rate on a 600 as opposed to a 680 on these loans are going to be significant. At least 1.5 point difference. All right. DTIs too, they're usually go up to 55%, 55% on the DTI, which is quite strong. So this is a great loan for a self-employed person who their bank statement may not show the income, right? Like for instance, a business that does a lot of cash, that instead of passing it through the bank statement, they may pay staff, they may pay rent using the cash. So there's no verifiable way of documenting what came in. But the money came in. Right? It's just that they're not putting it through a bank. They're not doing that, that kind of transaction. So a P&L, like I said, there could be self-prepared. I could write my P&L
Or
and
get a certified
I'll
tax
get a
person.
CPA to do your tax, your
You
P&L.
know.
But it's a great option for a self-employed person.
Okay.
All right. Um, Now, if you're going on the traditional side as a self-employed person, you still have options. So we mentioned a couple of the
QM.
non-QM options: the profit and loss, the community mortgage, the bank statement,
1099.
the 1099. Those are all on non-QM platforms, right? But you also, as a self-employed person, can qualify on a mortgage using the traditional ways, right?
Right.
If you have 2 years, you can still go FHA. If you have 2 years tax return that shows the income that is required for you to qualify.
You can even do a 1 year tax return.
And there's a great program. Generally, this program though requires you to have higher credit score because you can, if you're in business for 5 years,
Okay.
right? If you can
That's one
show,
of the requirements.
right. So one of the requirements for this 1 year tax return program is in business for 5 years.
Okay.
You're in business for 5 years, you can go 1 year tax return,
Okay.
right? But generally, to get qualified for this, because this is on a conventional platform,
The credit
is your
score.
credit score, and not just your credit score, but your the activities. So if you have a lot of lates and collections and stuff on your credit, you may not be able to get qualified for this loan. But if your credit is clean and you can show either way of Sunbiz registration or through a CPA letter or through a bank statement that your business has been registered or been in operation for 5 years, then this is a great, absolutely one of the best programs out there for self-employed person.
All right. So you saying for the 1 year tax return, let me just go over it a little bit.
Yeah.
So you have to have a clean credit history, right?
Definitely,
A
definitely.
great score, minimum about
Generally
six,
680 and
618
above.
of, right?
I
Okay.
see. I would recommend.
And be in
right?
business for 5
You,
years.
the main qualification is that you have to be able to prove
That you've been
you've been
self-employed
self-employed
for
for
5
5 years.
years.
And like I said, you can either use your bank statement, 5 years, show that your bank statement has been open for 5 years. You
Right.
can either get a CPA letter
Okay.
or you can show Sunbiz registration for 5 years.
Years.
Because again, and I'm going back to something we said in the
Earlier
earlier,
on. Mm-hmm.
that you can be in business but you're not registered.
Registered.
Right. So I could be in business for 10 years. I could have been a barber, could be a landscaper, I could wash car, I could, I could bake and sell food on the side. I could do all of that. I could have been doing it for 5 years. But I did not register my company on Sunbid.
Right.
But you're still able to do that program because all you need, you wouldn't be able to use that registration on Sunbiz because you're not registered. But I've been filing my taxes for 5 years, so I could go to my tax preparer and they could prepare a letter to state John Brown has been self-employed for 5 years.
Okay.
Generally, though, they require either like a CPA, enrolled agent, right? Not
Okay.
not
Not the tax preparer.
not just a normal tax preparer.
Okay.
Generally, those letters has to come from somebody who is licensed. So a CPA who has a license, or an enrollment agent that has a license,
Okay.
right? Somebody who is licensed, who they can verify that this person is legitimate.
Okay.
So that's an absolutely great product for self-employed person. I think we've gave a lot today.
We did.
All right.
You gave
So,
a lot of gems.
A lot of
a lot of
gems.
things that most people weren't aware of.
Right.
Right,
So
in
again,
terms of
there's a
being
lot of
self-employed.
options
Right.
out there for self-employed person. You just need to get with a lender that understands what they're doing and kind of is familiar with all the different kind of products.
Okay.
All right. So let's go over. So in closing today, we're just going to go over what we discussed.
All right. So again, as a self-employed borrower, right, there's a lot of there are options that you have. You can
Right.
either go the traditional route as doing FHA conventional or a jumbo loan, or you can go the non-traditional loan, which are the non-QM loans.
Right.
It could be like a bank statement, profit
Right.
and
Profit and
loan,
loss.
1099,
Right.
1 year tax return programs.
Right.
So again, being self-employed, you do have options in terms of what type of loan that you can get. So you know what I mean? So you're not like most people think like, oh, like Chris says, I have a hustle, I'm a barber, I'm an Uber driver, can't buy a house because I
No,
don't have.
you can.
Right. So there are options out there for
Right.
you.
Right.
Right.
All right. Now, if you're going to use your tax returns, and this is absolutely important for person who want to use their tax return option, you can't write off every single expense, right? If you make 200,000, you can't write off 199,000 and expect to qualify for the
Unless
mortgage.
you legitimately have 199,000 worth of expenses that you're gonna write off.
Right.
Because
So-
like again, you're telling Uncle Sam that these are the expenses that I have and this is what I'm writing off.
Right. But if you want to qualify for the mortgage using those tax returns, then what is not what you make is what you report.
Right.
And so on your 1040 online 8, circle that. So go to your 1040s, look at what is online 8. That's what the lender is going to use
Okay.
to
That's with
to,
the adjust. Is that your adjusted?
that's right. Income from self-employment is
Employment
reported on line 8.
Okay.
And so please make sure that you talk to your tax preparers to say, I want to buy a house. I'm in the process this year, 2022, 2023, 2024. I want to buy a house. So I'm going to eat some of my expenses. I'm not going to deduct everything. Because if you do everything, you may run the risk of not qualifying for the mortgage, right? Avoid commingling funds. This is very important because especially if you're doing like a bank statement loan, the lender is going to only use transactions that are
Apply to the business.
business
Related.
related,
Right.
right? And so you want to keep your personal funds, your personal transactions separate and apart from the business transactions, right?
Another thing that we discussed earlier is to register and license your business where possible, right?
Definitely.
Very important. So
Right.
this allows you to make the transaction a lot easier. So if you had a registered business and say the lender requires some type of documentation, it's easier to go and to wherever you license your business or registered to get that documentation
Right.
to provide to the lender.
For instance, here in Florida, we have Sunbiz, right?
Right.
Where you're
Where you
required to
incorporate
build,
your business.
right? And so, for instance, if you're going to be using like the 1 year tax return program, that it's very easy to go onto Sunbiz and to pull up your registration on Sunbiz and see when the business is registered, right?
Okay.
As opposed to if you did not register that business and you have to prove now that you've been in operation for 5 years,
Right.
then you're going to have to get a CPA to show, to
Provide
provide
some
a
doc
letter, right?
right.
Or you may have to go back to your bank and get your bank to show your bank statements for the last 5 years. So
Right.
it's
That may be a little difficult.
correct. So it makes it a lot easier when you register. Again, we're not saying that if you're not registered with Sunbiz, then you can't get a mortgage. We're definitely not saying that. We're just saying being registered makes it a lot easier when it requires documentation to prove how long you've been in business.
Correct.
All right?
All right. Another thing that we discuss and we're going to go over is that you need to maintain good records, right?
Correct, yes.
You need to potentially probably get QuickBooks, work with an accountant
Right.
or a certified tax person to keep records. So you need to have good records because again, whenever the lender requires documentation, it's accessible. Right.
It's the process is way easier, way better if you're organized. If you have all the
Definitely.
documents together, if you're able to just go, you know where they are, where to pull them from, and that whole process is a lot easier.
Right.
Again, it also helps in terms of reporting. So you don't have to be scrambling around trying to find receipts here, receipts there to prove the income.
Right.
If you have, if you use like QuickBook or you have an accountant that does your accounts, then when the lender requires, for instance, a year-to-date profit and loss, it's just a matter of the CPA just going in and clicking a couple of buttons.
Just not me going getting my big accordion file out and I have a receipt from
Right.
5 years ago, or this is what I did, or right.
Correct.
So
it makes that process a lot easier.
all right. So
All right.
maintain good record keeping.
Definitely,
Okay.
definitely.
All right.
All right. So
This
we've
is the-
we've come to the end.
Yes, we have.
All right. So thank you for joining us. Thanks to all our subscribers, all our
Yes. Everyone who leave comments, we
Right.
appreciate it. People who have contacted us via our phone,
Right.
thank you.
We have more people contacting us
Yes,
in
definitely.
private than persons commenting and liking and sharing.
Mm-hmm.
We also want to increase our subscribers. So we ask you
Yes.
to share with a
Please.
friend.
Subscribe
Subscribe.
and click the notification button,
the
please,
notification
so
bell that
you know
get
whenever we upload a
notification.
video. Right.
Definitely,
Yeah.
definitely.
All right.
But again, we're very happy to do this. It's been a journey, but again, we're going to get to 100 videos.
Oh, that's our aim, our
Your
goal. Our goal
The
is
goal
to
is
get
to get to
100,
100 videos,
and just be consistent. All right.
yeah, definitely.
Yeah.
So thanks again for your support. Thanks again for all the kind words, and please like, share, subscribe, and we'll be happy to present you
All right.
next
Do you want to
episode.
leave your information, like your contact information, because you gave some really great gems today.
All right, so
You gave some valuable information, right?
um,
Yeah. So in closing, I want to say that Chris is great at what he does in terms of getting.
I hope she's
helping.
not just saying that because she's my wife.
I'm not. I'm not. In terms of getting a self-employed person approved for a loan, he's great, right? He thinks outside the box. He's very creative, and creative in the sense where it's all legal,
Yeah,
right?
oh, yeah,
Nothing
definitely.
illegal,
No,
right?
we don't,
And you want to
no.
find someone who's creative, who thinks outside of the box, because at the end of the day, you just want to get the keys to your home.
Yeah,
Right?
definitely.
That's the goal. His aim is for you to get your keys to your home or investment property or a second home, whatever it is that you're doing in terms of getting qualified, right, for a loan. So again, give them your contact information so they can reach you.
All right. So firstly, I work with Loans Up Mortgage and Finance. I think you may be seeing it in the back. That's the company I work with. My contact information is 786-985-1383. 786-985-1383. My NMLS number is 1109644. So it's 1109644.
Again,
All
so
right.
if you're self-employed,
If you're self-employed,
trying to
and
buy a first home, second home, or investment
Investment.
property, we have a lot of options out there. There's more options for you, right, than if you're a regular a W-2
yeah,
employer.
right.
So give us a call or give Chris a call. You can even call me, and then I can connect you with Chris. My contact information is 786-214-1436. Again, we are happy to provide you with this information. Call us or leave us a comment or a question, any related to the show. We would definitely be happy to reach out to you.
All right. Thanks a lot for joining us. Thanks a lot for subscribing. Thanks a lot for sharing. And please continue to do so and have yourself a wonderful, wonderful week. Thanks
right.
a lot.
Bye for now.